suggests continued sluggishness, though not a relapse into a deeper recession. Ed Brown, which of these numbers, if any, is the one to watch for the 1992 markets?
What I'd watch for, Lou, first, second, and third would be consumer confidence. We have to have that come back before we can see an improvement. The second one would be unemployment insurance claims and help wanted ads, the index. We have to see that turn around, and that will be an early indicator of the direction of the economy for 1992. And lastly, any tax changes. Forget about the $300 rebate. That's a one-time shot. What I would look for is a change like they floated this week, maybe some change in the passive losses for real estate. That will give you a huge multiplier effect.
Harvey Eisen, Ed says that we have to see some signs of confidence somewhere other than Wall Street. What do you think?
I think that's a good point. I think the consumer is still very confused about what's going on, so I think his point is absolutely right. You got to see some consumer confidence. These layoffs from restructurings have been devastating. Secondly, it's money. It's always money. They've got to get long-term rates down, and I think you've begun to see that. And finally, this fiscal package is going to be very important to the economic recovery.
Do you expect to see that consumer confidence come back?
I do, but I think it's going to take longer this time because of the change in the nature of unemployment. This has never happened before, structural change in unemployment.
Ralph, what do you think?
Well, I think all the points that my fellow panelists just brought up are very, very valid. But, you know, being a student of the stock market, the Dow itself is a leading economic indicator. If this rally that we're in should falter and start to turn into a rout, I would be very, very upset. I think, quote, the collective wisdom of Wall Street suggests that there will be a recovery. So I go with the trend of the market.
Ralph, the market's breadth this week was impressive. Number of advancing stocks. Today it was close to 1,100, and that was the worst day of the week. It was as many as 1,400 in the past week. Is that alone a figure that impresses you?
Oh, not only that, but you look at the other averages like NASDAQ, the Amex. It's across the board. This is a broad-based affair, and that bodes well for the economy.
Bill Waters, what do you be looking at?
I'm worried, Lou, that corporate America has discovered cost-cutting and that unemployment is not going to come down as fast as we'd like, and that consumer confidence is going to be slow in coming back. But it will come back. I think we might see interest rates go even lower, despite the Greenspan Christmas present last week.
Is that a forecast for a still higher unemployment rate before we're finished?
Could be, but certainly isn't going to come down quickly. I think we're going to see a plateau here for a while before it starts to trend down.
All righty, now comes the moment of truth as we contrast what really happened in 1991 with what our panelists predicted. And it's been a tough year for us fans of the Marquis de Sade because they did so spectacularly well. In terms of the Dow's high and close for the year, which we won't know for sure until Tuesday, no fewer than 6 of the 28 panelists predicted that the high for the year would be precisely 3,100, just 1 point below where it is right now. And Frank Cappiello actually gave 3,101 as his closing prediction. As for the low, all but 3 thought it would go lower than the actual 2,470, though Carter Randall is looking like a winner there with his forecast of 2,460. The Booby Prize, incidentally, goes to perennial pessimist Jim Grant, who was last year's winner thanks to Saddam Hussein, but who thought the Dow would end this year at 2,000 and offered a bunch of short sales and a purchase of gold that together would have cost you 42% of your nest egg. We've got to get that guy to start smiling. Ed Brown, no such problem with you this year. You were one of the 6 who gave 3,100 as the high for the year. You thought the Dow might sink 100 points lower than it did, and you thought we'd end the year no higher than 2,950. But just look at your stock selections. A record, more than doubling, up 110% for the year. Tonight we'll find out what you can do for us lately. Congratulations.
Thank you.
Harvey Eisen, it is not easy to get cross with you either. You predicted a Dow high of 3,125. We'll have to see what happens Monday and Tuesday on that one. You were too gloomy with a 2,050 low and a 2,675 close, but your stock list is up by 81%, which ain't exactly parsley potatoes. Congratulations to you, too. Ralph Acampora, you get the title of Mr. Consistency. Your Dow predictions were impressive enough, 3,100 high, 2,425 low, and 2,975 close, but your stock selections, which were up an average 77%, didn't include a single choice that failed to rise by at least 30%. And this follows your performance in last year's crummy market when your selections rose by 26.5%. Clearly, you're doing something right with those charts.
Thanks, Lou.
All these calculations, incidentally, were made on a total return basis by our friends at Bloomberg Financial Markets. And they tell us that you, Bill Waters, came in fourth with your list with a gain of 70%, which would be good enough for the blue ribbon almost anywhere else in the investment world. You also predicted a 29.90 high, a 2200 low, and a 24.50 close. So if we can just get you to stop listening to those gloomy types you meet in Wall Street, who knows how much you'll be up next year.
Thank you, Lou.
Congratulations, sir. Congratulations to all. But now let's see if they can keep it up. Let's have from each of them the true inside word on the highest close, the lowest close, and the final close for the Dow Jones Industrial Average in 1992. Ed?
We'll have a high of 36.60, a low of 27.75, and a close of 34.75.
Doesn't sound bad. Harvey?
A high of 37.50, a low of 27.25, and a close of 33.75.
Let's get this year started. Ralph?
My high is 3,500, my low is 28.50, and my close is 34.75.15.
.15.
Yes,
Okay.
I want to be very
That's right. That could give you the title.
Yeah.
Bill, or not?
Shame on me. My high is only 32.50, Lou. My low is 27.50, and my close is 31.50.
Well, one thing for sure, and this is the only thing I guarantee, some of them will be wrong. But now let's get to specifics and find out what each of them thinks will be the best investments of 92. And if you would like to see the full predictions with specific stock selections from all our panelists, including those not here tonight, on where to invest in 1992, every one of those lists will be included in tonight's transcript. If that sounds good to you, you can get that special New Year's transcript by sending $5 to Transcripts, Wall Street Week, Owings Mills, Maryland, 21117. That's Transcripts, Wall Street Week, Owings Mills, Maryland, 21117. And now let's find out what these four think are the very best buys for 92. Ed?
We'll have three repeats from last year: Harley-Davidson, Office Depot, and Value Merchants. Three healthcare-related stocks: Healthcare Retirement, NovaCare, and Amgen. One technology stock, BMC Software. Two specialty merchandisers, Little Switzerland and Vans. And two financial services stock, Fannie Mae and MNC Financial, which is a turnaround situation.
Harvey?
Two heavy management ownerships, ITEL and Egghead Discount Software. Three so-called growth stocks, McDonald's, Eastman Kodak, and Digital Equipment. Two financial service companies, Primerica and Chubb. And one dark horse that has never worked, so this has got to be the year, Neiman Marcus.
You use the law of averages in your investing psychology, do you?
I try. Anything will help.
All righty. Ralph?
I'm going to have low-price stocks, all under $15. Charter Company, Echo Group, EKO is the symbol, Goodmark Foods, over-the-counter, GDMK is the symbol, Greenwich Pharmaceuticals, Hovnanian Home Builder, HOV is the symbol, Lauder Chemical, Perry Drugs, Recognition Equipment, Santa Fe Southern Pacific, Standard Pacific, 3 Comcorp, and Toll Brothers.
When you say they're all under $15, is that your prediction for where they will end the year?
No, actually, I think this is going to be a year of secondary stocks, small capitalization stocks, and the low-price stocks will do well.
Are your reasons technical or fundamental?
Combination of both.
What's the fundamental reason?
In some cases, earnings. In most cases, good chart patterns.
Bill Waters?
Lou, Abbott Labs, American Barrick Resources, a repeat, American Family Corp, Cabletron Systems, Capital Holdings Corp., EMC Corporation of Massachusetts, Genzyme Corporation, Gillette, Intelligent Electronics, another repeat, Standard Federal Bank of Troy, Michigan, U.S. Healthcare, and Valero Energy.
What do those stocks have in common aside from your endorsement?
Well, they've got great bases on the charts to give Ralph a hand here, and a lot of earnings momentum, and most of them are selling fairly near the year-end highs.
Well, with the usual warning that there's no endorsement from the management, that's what these guys think. Bill, you've been with us for more than 20 years as a panelist. Is the situation today like any previous situation in that 20 years?
None that I can remember, Lou. None that I can remember, and I think it's going to be great fun going into the rest of the 90s.
The mood of the country is notably negative. Alan Greenspan commented on it. George Bush this week kind of threw up his hands and said he couldn't figure it out. Then he kind of walked away from his earlier economic predictions, saying he was a non-economist. Why are people so down?
People are down because they are seeing their friends out of work. They are seeing the stores empty at Christmas, and they are looking for leadership. We got great leadership in foreign affairs early this year, we now need desperately for Washington to show some leadership.
If the economy is so punk, how can Wall Street be so strong?
Because Wall Street discounts ahead. And always Wall Street is ahead of the recoveries. This time we're a lot farther ahead than in the past. It's usually 3, 4 to 6 months. But the recession will end and Wall Street will lead it. And I think, on balance, as we all said, 92 is going to be a very good year.
Let us pray. Historians may recall also that while the stock market is often wrong in its panics on the downside, it has never yet had a move this strong that was not followed by a strong economic recovery. So let's hope that it's going to happen one more time for the whole country. There we do have to stop. Thanks to our panelists for once again being